If you've been looking to buy, sell, or rent in Halifax, you'll know that the market has been crazy over the last few years. But right now, there's a huge variable that's been in the headlines lately: US trade tariffs. With ongoing trade friction, new tariffs on Canadian exports, and potential retaliation on incoming goods, trade policy is dominating the news. But what does decisions being made in Ottawa and Washington have anything to do with a price of a semi-detached home in Dartmouth or a new build condo in Halifax? In this video, we'll be breaking down 3 ways that US tariffs are threatening the Halifax housing market, and what this means for your wallet if you're planning to buy, sell, or build. Up next on Halifax Home Guide. So as I talked about in previous videos, the market has definitely softened over the last year or two. With lower house prices in some neighborhoods and increased inventory, this has been the best time to enter the housing market in the most recent years. And if you plan on purchasing a home here in Halifax anytime soon, you can click the link in the description below where you can book a free no obligation 30-minute phone call with me, where we can discuss your home needs and decide if we'd be a good fit. Moving on to the tariffs. The first direct impact on our housing market comes down to building materials. The US and Canada exchanges billions of dollars worth of home building material every year. When tariffs hit metals, hardware, lumber, appliances, and glass, the cost to build a home jumps up immediately. Here in the Halifax Regional Municipality, we've already been facing a supply shortage over the last few years. Local builders are relying heavily on imported goods, from US-made HVAC systems and electrical supplies to hardware and finishing products. Industry reports from groups like the Canadian Home Builders Association warn that elevated material costs could squeeze developer profits. When building comes too expensive, developers hold back on their projects. For Halifax, fewer housing starts is definitely a concern and keeps upward pressure on new construction prices. Point number 2. Interest rates and your monthly payment. Now, this is where things get interesting for the prospective homebuyer in Halifax. Recent economic forecasts, including updates from Canada's major financial institution and housing agencies, highlight that trade uncertainty puts the Bank of Canada in a tight spot. On one side, economic drag from trade friction can lead central banks to slash the interest rate in order to support the economy and provide some short-term relief to variable rate holders. On the other side, tariffs increase the cost of goods, adding to inflation. Now, higher government debt and persistent inflation help keep bond yields high, which directly keeps fixed-term mortgage rates high as well. So if you're waiting for 3% fixed-term rates to come back, trade tariffs are making this scenario less likely. Because constructing new housing is becoming increasingly more expensive, and with the added tariff pressure, buyers are naturally forced to look at resale homes instead. Existing homes don't face immediate tariff markups, which can temporarily concentrate buyer activity and competition in great areas. While major markets like Toronto and Vancouver have seen major price corrections over the last couple of years, housing market outlooks such as those put out by Royal LePage and the Canadian Real Estate Association continue to list Halifax as one of the areas that has shown price resilience despite everything that has been going on. This is driven by modest growth, regional migration, and low inventory. However, the trade uncertainty acts as a double-edged sword. So let's talk about consumer confidence. If tariffs end up hitting broader Canadian exports, employment uncertainty can lead to buyer fatigue and a lack of confidence in their situation and the market. People adopt a wait-and-see approach, slowing down the overall transaction volumes, even though pricing will stay roughly the same. So what's the takeaway for Halifax? If you're building or renovating, expect higher material builds and delays. If you're buying, keep a close eye on the fixed mortgage rates. If you're selling, high construction costs could lead buyers to look at more resale homes. But buyer sensitivity to mortgage rates remains very real. Trade policies in Ottawa and Washington feel as though they are far away, but their impact settles right here on our local doorsteps. So now I want to hear from you. Are you planning a move within HRM this year, or holding off to see how the market unfolds? Drop your thoughts in the comments below. Don't forget to hit that like button and subscribe to the channel for more local real estate breakdowns, and I will see you in the next video. Take care.